Good morning and welcome to the Australian Stock Reports online morning update for the 22nd of October 2012. US markets suffered a dramatic sell-off to round out last week as a raft of disappointing profit results weighed heavily on sentiment. Blue chip giants General Electric, Microsoft and McDonald's ignited the panic selling on Wall Street after all three reported earnings that missed analyst estimates. It was the worst one-day drop on the street since June, with the falls wiping out nearly all of the week's earlier gains. There wasn't even anything on the economic front to cheer investors, with US existing home sales declining in September. Commodities weren't spared from the bloodbath. Gold and copper were both hit by a resurgent US dollar, which was well supported by safe haven demand. Elsewhere, crude slid 2% as the weak economic and earnings data overshadowed reports a key oil pipeline in the US has been temporarily shut, potentially choking off supply to the nation's Midwest. The Aussie dollar was pressured by sliding commodities, whilst the euro declined after the latest EU summit failed to make any progress on Spain's problems. The SPI was swept up in Friday night's sell-off, breaking support around 45.40 before extending its declines towards 45.10. Any fade higher could now be met by resistance around 45.40, which could precede the next major down move for the index. Aussie shares are tracking for a sharply weaker start to today's session, with SPI futures pointing to a 50-point drop on the open. For the Asian markets, we maintain our long bias on the Hang Seng and a neutral bias on the Nikkei, whilst in the Australian equity section we have a long biased trading idea on FlexiGroup. That wraps up the Australian Stock Report morning update. Thank you for listening.